You look at this situation, you look at the dollar, you can see that the dollar is declining in its influence. A lot of this is due to actions actually by the Biden administration. It's declining in its influence. Both the hegemons can see that debt situation in America is all but terminal for America, all but terminal for the dollar. What they don't want to be is accused of undermining the dollar unnecessarily. Their policy has been just to sit back and let the dollar destroy itself. This is now happening at an increasing pace. And this is why gold and silver have been rising. The people who I would rather describe as trying to escape credit because they understand the problems that credit faces, they're better just sort of stay with it and use any dip to get out of credit and get into gold. After all, is what the People's Bank of China is doing. It is selling US treasuries to buy this stuff.
With the U.S. national debt surpassing $34 trillion, many developing nations view maintaining the U.S. dollar as a reserve currency as increasingly risky. This debt burden not only impacts their local economies, but also hampers global growth and affects local businesses. Consequently, developing countries are shifting away from reliance on the US dollar and turning towards alliances like Brics. Alasdair Macleod, a former bank director and the head of research at goldmoney.com, suggests that leaders like Putin and Xi recognize the precariousness of America's debt situation, viewing it as potentially terminal for the dollar. Rather than actively undermining the dollar, their strategy is allowing the currency to unravel on its own, contributing to the recent surge in gold and silver prices. Gold has risen over 15% in the past 3 months, emerging as the top-performing asset class in 2024. Silver has also experienced significant gains, delivering over 13% since the beginning of the year. However, Alasdair notes that the recent coordinated knockdown in gold and silver prices on Friday may have been an attempt to target stops and pressure investors fleeing into precious metals to escape credit risks. The gold and silver markets experienced considerable volatility on Friday, with gold prices swinging by $98 intraday, reminiscent of the December rally that briefly pushed gold prices above $2,150 an ounce. Alasdair suggests that while the rapid rise in gold and silver prices may indicate trouble for bullion banks holding short positions, particularly in the COMEX market, it also exposes the banking system to significant pressure. Come along as we explore the valuable insights provided by Alasdair Macleod. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
I think that, if you put yourself again in the shoes of Putin and also President Xi, you look at this situation, you look at the dollar, you can see that the dollar is declining in its influence. A lot of this is due to actions actually by the Biden administration. It's declining in its influence. And not only that, but both the hegemons can see that the debt situation in America is all but terminal for America, all but terminal for the dollar. What they don't want to be is accused of undermining the dollar unnecessarily. Their policy has been just to sit back and let the dollar destroy itself. This is now happening at an increasing pace. And this is why gold and silver have been rising. It's not that they have been rising, and as we've discussed before, it's actually the dollar declining. I think what we're seeing is we're seeing an increase in the pace of decline of the dollar. It is clear also that the rate of inflation in America is not falling. It is clear that with the US government in a debt trap, that bond yields will rise. It's also clear that rising bond yields, rising interest rates, the attempt of banks to avoid risk means that the private sector is going to be deprived of very expensive credit. When I say deprived of expensive credit, I don't mean they're going to be offered cheap credit, far from it. The situation for over-leveraged businesses, I mean, we've seen this with the commercial real estate sector. Same with private equity, which works on leverage. There is going to be an absolute catastrophe in the private sector. And the banks, the commercial banks, want to avoid this. And I was interested to note that Jamie Dimon came out with a statement, I think it was last week, of sort of the prospects, and he was pretty much echoing what I've been saying, but perhaps slightly more politely. So you've got the same message right from the top as the one I'm giving you now. This is a situation which is deteriorating as far as the dollar is concerned, and that is why gold and silver appear to be rising. It rather suggests to me that there could well be bullion banks in trouble because they take the short position. Not only do they take the short position in the market on COMEX, and COMEX incidentally has grown as a proportion of the total world futures market or paper markets, because the OTC market in London, I was surprised to see in a presentation by Ruth Crowell, who's the head of the LBMA, that COMEX has probably caught up. It's probably as much as, I don't know, something like 60% of the LBMA's size, whereas in the past, the LBMA was 10 times the size. So this is interesting. So what we're looking at, when we see the numbers on COMEX, you can see there's a pretty naked short position amongst the swaps, which are basically the bullion banks. And not only that, but in Europe in particular, banks offer unallocated gold accounts, and these are fractionally reserved. So that again is technically a short position in the bullion market. So I think that this rise in the gold price and also the silver price is putting an enormous pressure on the banking system.
Alasdair highlights that as gold prices continue to soar, the demand for silver is also expected to rise, driven by factors such as demand from India and industrial usage. In the domestic market, silver prices have reached all-time highs, propelled by various catalysts, including safe haven demand amidst escalating geopolitical tensions, expectations of U.S. interest rate cuts, speculative buying, and a strong rally in industrial metals. While the benchmark London spot silver performance has been relatively subdued, it remains near three-year highs. Macleod highlights China's significant role in the silver market, particularly in industrial applications like photovoltaic cells and lithium batteries. The expansion of these industries drives China's increased demand for silver. China's leadership in this regard is evident, with the country adding 240 gigawatts of solar power capacity in 2023 alone. Photovoltaics alone consumed 142 million ounces of silver last year, accounting for 13.8% of total silver usage worldwide, a significant increase from nearly 5% in 2014, according to data from the Silver Institute. Let's get back to the interview.
Silver, the price has been controlled, I think, by China, because the People's Bank of China has really had, back in 1983, it's given a dual mandate on gold and also silver. With respect to silver, China uses it not as money, but it uses it as an industrial metal. China is the major manufacturer of photovoltaic cells. It's stepped up its production of lithium batteries, and generally the consumption of silver has been rocketing. India came into this as well recently. The Indian government wanted to generate or support the photovoltaic cell business. I think this is partly, if you like, to offset the increasing amounts of carbon that the nation is generating. So the result is that some very large businesses in India have been building factories to produce these photovoltaic cells. And one in particular, Reliance Industries, was in the market, and I believe that was the company which was taking delivery on COMEX. With something like, 1,300 tons has gone out of COMEX since January the 1st. And Reliance Industries, phase one of its production was due to start in March. And that is that's a 5 gigawatt photovoltaic manufacturing facility. They're looking to doing 20 gigawatts. Now, this is a very serious demand element for silver, which takes the control of the price away from China. And that's a very important point. And as well as that, of course, we do know that when gold runs, silver tends to run twice as fast. The gold-silver ratio starts rising because, monetary interest disappears from silver. But the monetary interest is still sort of there in an underlying form, if you like. And I think what we're likely to see is that as gold goes up, and we've now seen that it's broken out of sort of recent lethargy into really new high ground, which basically means the dollar is declining, then we're seeing this also being reflected in other metals, including silver. But it's silver's historic role as an alternative money to gold, which I think will drive the price considerably higher. And I note today, this is Monday the 15th, that looking at gold, it is up about less than 0.2%, and at the same time, silver is up 2.36%. Excuse me. This indicates a very tight market, and I would see that continuing. So even if the recent rises, which have been spectacular, as far as people who don't understand its credit going down, as far the people who don't understand that that's the case, this rise has been spectacular. I think silver will probably tend to hold up better than gold because of these underlying industrial dynamics, with the acceleration of demand from India, which has now become a major importer of silver, not because Indians are so much buying silver as ornaments and all the rest of it, or as a cheap alternative to gold, but I think it's that industrial demand which has really been driving it. And that's the new factor out of India.
Citi's analysts, led by Akash Doshi, project gold to reach $3,000 per ounce over the next 6 to 18 months. They also note that the financial gold price floor has risen from around $1,000 to $2,000 per ounce. How do you perceive the recent surge in gold and silver prices? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.